Is your car a diesel? If so, you may well have been unsettled in the past few weeks as a consumer. And have you invested in German car companies? In that case, the subject will interest you as an investor, perhaps both. Our keynote topic in the current Werthstein Index update. Cars made in Germany, that used to really mean something. We ask if it still means anything much. Will the conflict between the USA and North Korea escalate further? Or was it just that overheated markets were looking for and found a blow of wealth? And what does the Werthstein Index do? The Werthstein Institute assesses the current situation in financial markets.
Car cartel, Dieselgate, the trend to e-mobility completely missed. In recent days, Germany's premier industry has been the butt of one bad headline after another. No question the car makers have a confidence crisis on their hands. Demand for diesel cars is on the decline, not least because they may be banned from inner cities. And in Germany, it's long since become a general election topic. SPD Chancellorship candidate Martin Schulz takes the carmakers' bosses to task, demanding an EU-wide quota for e-vehicles. Chancellor Merkel doesn't think much of that, but indirectly she accuses the German car industry's managers of lying.
The truth will out, the confidence is gone, the crisis is impacting on stock markets. European auto stocks are lagging behind the overall market, as you can see, and despite the industry partly produced record results in revenues and profits. Giles Keating, president of the Werthstein Institute in London, rightly so?
Yes, rightly so. The German car companies, I'm afraid, have just failed to keep up with modern developments. I'm even worried they could go the same way that Kodak went. You remember that global film giant which went bankrupt 5 years ago.
But it doesn't have to go so far, right?
Of course not, provided they accelerate the pace of change. I think Mercedes is perhaps doing best, and after that BMW, but Volkswagen is really lagging behind.
Okay, Daimler & Co. still have a chance, but at what price? I ask Dominik Müller, financial analyst at the oldest private bank in Switzerland, Rahn and Bodmer.
The price is higher capital investments and potentially lower added value and thus lower margins per vehicle produced, which altogether means lower free cash flow for the producers of those cars. In turn, that means lower share prices for investors in those shares.
Thanks to Dominik Müller in Zurich. But Dieselgate isn't a purely German problem. Renault and Peugeot apparently also cheated. Our French colleague Valérie Pruniol is on the phone today from her holiday resort. So, car makers are now offering discounts to encourage customers to switch in new diesel cars. Is that a sustainable measure?
Well, in the short run, customers may still be attracted by diesel cars, especially when prices are lower. But the longer-term trend does not bode well for diesel engines, no matter how clean they are claimed to be. Regulators, especially in Europe, are going to make life more and more difficult for diesel engines, and eventually customers will shift away from this technology, which has been badly hurt by the recent Dieselgate.
Many thanks, Valerie. And now we go to Frankfurt and Baader's Bank capital market analyst Robert Halver. As candidates in the upcoming German federal election, Schulz and Merkel have meanwhile both defined cars as a major theme. What does it mean?
Diesels account for a third of all vehicles in Germany. Politically, it would be really stupid not to exploit the diesel scandal in the election campaign. So the car industry gets a bashing and is told it must provide software and hardware updates. But after the election, nobody will be interested anymore. And the car industry will say, we're offering eco bonuses all round. You could also call them purchase incentives. The motor industry makes gigantic profits. And politicians will smile indulgently. That's the car industry lobby.
Many thanks to Robert Halver for this assessment. And now to the overall market, which has been influenced rather geopolitically in the last 2 weeks by the escalating conflict between the USA and North Korea. Dominik Müller in Zurich. In the past week, it seems worries have been disappeared. Should investors keep this issue in mind?
They certainly should. I mean, even though Kim will not risk an escalation, unless he is up against a war with his back, which he's currently not. And Trump will not risk nuclear winter either, so that is not the biggest risk. However, uncertainties will linger since President Trump has taken this to the next level, to the trade negotiations with China, and that will be a potential threat to financial markets as well.
Okay, may I have your vote please on our scale from 1 extremely negative to 10 extremely positive?
I stick to my blended 4.
Dominik Müller with a 4. And now we come to the Werthstein index, which reflects the current market opinion of the Werthstein Institute. It expresses an expectation of how global stock markets will develop over the next 3 months. What's the current vote?
Mounting geopolitical tension and the prospect of the Fed tapering in the autumn push me towards more caution. So I'm putting down my vote to 3.
At the moment, we've got some geopolitical trouble, above all between North Korea and the USA. Unfortunately, Mr. Trump is no Prince of Peace. He pours a lot of oil into the fire. And we also have a few problems, at least of a verbal kind, on the interest rate front, which are also holding the markets back. My vote for the markets is 5. At the end of the year, things should pick up again, but for the moment, I think it makes good sense not to buy shares.
Well, look, I'm also worried about geopolitics. I'm also worried that valuations look a bit high and markets seem to be losing a bit of momentum. Now, if I put all that together, I'm actually going to stick with my 3 that I had before, because that was already a very cautious score. And if I combine that with Valerie's 3 and Robert's 5, that makes a total of 11. And that actually brings the Werthstein index overall down a little bit from 4 last month to 3.7. It's a bit of a sign of caution given all those worries.
So, the Werthstein index is down again and at around 4 is still at a cautious level. Before the vote, we talked about the fact that traditional car makers have to some extent missed the boat as regards the new technologies. Again, Giles Keating in London, where can we find interesting investment alternatives?
Well, there are 2 Werthstein zeitgeists. There's driverless cars and there's battery renaissance. And I think both of those really address those problems of getting away from the old diesel and petrol and towards new systems. So both those zeitgeists are very interesting opportunities.
Thanks, Giles Keating. Battery renaissance and driverless cars are just 2 of a total of 15 zeitgeists you can choose from as a Werthstein customer to assemble your individual portfolio. And we will be back with the next index update in 4 weeks.